Hello and welcome back to The Note. We are going to be continuing our discussion of this book, Consolations of Economics by Gerard Lyons, Economic Advisor to the Mayor of London today. We've already discussed the role of demographics and how that might give us a chance for renewed global economic growth, but there's a big question of whether we have a financial system that is capable of getting us there. Obviously, we suffered a nearly existential crisis for the financial system back in 2008. Have the necessary changes been made to create a financial system that can guide us to the growth that we all desire? With me now to discuss this once more is Gerard Lyons.
Hello.
Thanks. So you draw the analogy in your book, fascinatingly, with Apollo 13, the stricken spaceship that needed to be mended on the hoof while orbiting the Earth after an accident. Obviously, a wonderful analogy for what's happened to the world's banks since 2008. What is the tinkering that's been done since 2008 into regulations? What has it achieved? Are you really confident that it can re-enter the atmosphere?
Yes. Well, I raised the question, is this an Apollo 13 moment for the financial sector? Because, as you say, in the film or in the documentary or in real life with Apollo 13, Gene Kranz, the head of mission control, he was approached and people said, this is NASA's worst moment. And he said, on the contrary, if we get the 3 astronauts back to Earth safely, it will be NASA's best moment. And so it proved. Right. So the question is, does the financial sector learn the right lessons from this crisis?
And what do you think the right lessons are?
Well, I say the crisis was caused by the 4 Gs. Right. Glass-Steagall, governance.
Or the lack thereof, right?
Well, yeah, Glass-Steagall, you could say technically didn't cause the crisis, but it set a template that led to some of the problems. Yeah. The other 3 Gs, in addition to Glass-Steagall, were governance, Greenspan, and greed. Right. So governance in the financial industry, Greenspan and the whole operation or lack of operation of monetary policy, right, and greed, namely the incentive structure. So I've talked about some of the issues. There's no doubt that there are some significant challenges in the near term, particularly how we exit from low interest rate policy in the West. Right. There's some key lessons about whether some of the measures in terms of too big to fail, etc., have actually really addressed the issue. But notwithstanding that, and I discussed these, I think we've actually identified the problem. We've put some of the key things that need to be put in place. And then the question is the financial sector there to be fit for purpose? And there are some big future trends I talk about: state capitalism, right, the change in the dollar, the way you actually address microfinance and making the financial sector there good for growth. Okay, so these are key issues.
Okay, you have microfinance and peer-to-peer lending suggest that there's a new nascent financial system trying to burst out. What has really changed about the system that we already have, though? I mean, you've got the Volcker rule, but basically, we don't have anything like a Glass-Steagall split anymore. The very biggest banks are even bigger than they were before, thanks to the mergers that got us through the crisis. I'm not really aware of any great reforms to the compensation structure. I mean, greed is always going to be there, but we're not doing anything to temper the impact of greed. What exactly makes you optimistic that the changes that have happened have been the right ones?
Well, even though we've called it a financial crisis, the reality is that it was a banking crisis. Other parts of the financial sector did pretty well. And what we're now seeing is some of those other parts of the financial sector still in pretty strong shape. The questions that are raised...
Like insurance or what?
Well, you could say insurance, you can say asset management in the West, you can say some of the new areas that have cropped up, private equity, etc. But the real challenge maybe is the way in which the regulatory pendulum has swung from one extreme to the other. Like a pendulum before the crisis, regulatory pendulum was on light regulation. Now it's swung like a pendulum to the other extreme, heavy regulation, where ideally we want it to stop in the middle. And that incentive structure then has been for lots of things to go into the whole shadow banking area, outside the regulatory environment. So it's very difficult to assess the risks, very difficult to actually gauge some of the risks. So I think there are some challenges that will only come to light as we return back to normality. And I think a lot of focus does in the very near term come on monetary policy, because the lesson from the last 20 odd years was not that a monetary policy came to the market's rescue, hence the Greenspan problem. It was that when we got back to the good times, monetary policy wasn't tight enough, and therefore we didn't really price properly for risk. And a lot of the issue is about pricing properly for risk when we return to the good times.
Now, I quite agree with that, but my final question, therefore, to continue your Apollo 13 analogy, can we actually survive when we re-enter gravity, re-enter the atmosphere. The analogy for that is when rates rise to a more natural level. You're suggesting not just a 2.5%, 3%, but 4 or 5% truly tightening. Are we going to, have we fixed the satellite in such a way that it can survive re-entry?
Well, I think that's the big question, and my answer would be yes. And I think it's important to say that in many respects it was a Western financial crisis. What becomes also very important in the future is how the rest of the world, which basically is a bigger part of the growing global economy, how that handles. And in terms of one of the things, it's about how the institutional framework develops across the emerging world, not only about how we fix things in the West as well.
Okay, Gerard, thank you very much indeed.
Thank you.
Many viewers will know that I tend to be pessimistic about some of these issues. I do think there is every reason, therefore, to read the opposite case. There are certainly many grounds for optimism out there. I'm still somewhat nervous as I face the moment when we do indeed try to return to gravity, when we do indeed try to return to normalised monetary policy.